Welcome to the LA Real Estate Podcast, your podcast on buying and selling real estate in Los Angeles. Today on the show, we'll be checking in with our good friend Natalie Salins. She'll give us an update on rates and explain what it means to refinance. Justin and I will also discuss when to buy and when to wait. Justin, Happy New Year.
Happy New Year, Sarah.
Woohoo, 2023. I think the hardest part of New Year for me is I will write 2022 on all of my documents at least 3 times in a row and then have to go back and correct them to 2023.
I got in so much trouble from the guy I was running my storage space last year because I wrote him all these checks.
Oh, the post-dated checks.
The predated checks.
Oh,
right?
No.
He said, I can't deposit this check. It's from last year. I'm
who writes checks anymore? That's what I want to know. Well, welcome, new year, new day. Who knows what is on our horizon? Everything in the last couple of years has been so unpredictable and so insane that I don't even want to predict what's going to happen. I'm just happy I'm here now, healthy and happy, and just very grateful to be in the studio again at Real Voice LA, our favorite place. This is like my second home. And Mike DeLay is in the studio with Christian Pedersen, our producer and our engineer. And we are so happy to be with you guys again. We love it here. So happy. Anyways, enough of that. Let's get into some real estate. With us on the program is our good friend Natalie Salins from Movement Mortgage. Natalie, welcome back to the show.
Hi, nice to be back.
How have you been?
Good.
So are you
hanging in this market?
Yes, please. Let's talk. So everybody knows interest rates have gone up. If you're looking for a house and you don't know interest rates have gone up, then you need to read more online. Interest rates, it's blasting out everywhere. Interest rates have gone up quite a bit. So can you give me a little bit of an update about what's going on with rates right now?
They've been up. We hit a pinnacle the beginning of November where rates were pretty darn high in low 7s, high 6s. And then there's been quite a bit of information that's just recent, couple weeks that the Fed basically feels good about inflation numbers and what they've done with the Fed rate. And they are not going to raise it as much in the next coming meetings.
And just historically, a 7% rate, it's probably been since 2007, 2006. Yeah. Oh, that was a good guess. Since we've seen a rate that high. So it has been a long time since rates have been that high.
Long time. When I started in 2006, they were at 7.5. Yeah.
Wow.
And only went down from there. Never seen them really come up.
How are you seeing that affect your buyers right now?
So it's funny, when they came up to the 4s in April, everybody kind of freaked out, digested it, moved forward and was fine. Then they were up to the 5s, and then they were up to the 6s. And the same thing happened in the 6s. People freaked out. They backed out of the market. They thought it was too high. And then they started digesting it, understanding it, and moving forward and being okay with the payment and being okay with the rate. The 7s were a little bit harder to swallow because that really kind of feels like hard money. And hard money was at 10%. My bank statement onlys were high 7s, low 8s.
Can you explain what hard money is to anyone listening that doesn't know that term?
Oh, sure. So a hard money loan is really like getting money from a true private investor, like a private entity, somebody who's just loaning money out at 10% of the personal funds kind of thing.
And they take riskier loans.
Yeah, you don't need any documentation on a hard money loan. The only thing normally a hard money loan wants is an appraisal, and that's it.
So rates have gone up quite a bit. Are you seeing, to kind of mitigate that, people are putting higher down payments down so they're not borrowing as much money?
Yeah, so it depends. One, rates are back down. We're in the high 5s again, which is fantastic.
Oh, wow, that's a big drop.
Big drop. Yeah. I mean, low sixes, high fives, I'd say. But if you pay a little bit, quarter of a point, half a point or so, I did have 5.99. On FHA, I'm at 5.5.
That's great.
So definitely better. My FHA 5-year ARM is at 4.75. So we've definitely moved back into an area that's comfortable.
Well, what's
for sure.
funny is we didn't even bring up FHA loans before very much because we couldn't get offers accepted with small down payments. It was impossible, but the market has changed a bit. So people are able to put less money down.
They can get, right? Yeah, exactly. And FHA loans are so great. I mean, I can close an FHA loan legitimately in 12 days. I've done it before. Easy, all day long. FHAs are very simple. They allow for a lot of risk. So they allow for high ratios, very low credit.
And can you explain the FHA loan again for anyone listening that doesn't understand what an insured loan is?
Sure. Yeah. So FHA is the, Federal Housing Administration loan. It's through the government. It is an insurance company. So that mortgage insurance is very high, but it allows for a lot of risk. You can go into an FHA loan with zero money in the bank and zero money when we're done, and they will close the loan based on you getting the 3.5% down minimum payment through a gift and getting your closing costs paid for by the seller. Like, I've literally gotten into escrow where my clients have $500 in the bank and we close. And
wow.
They didn't bring any of their money in. And you don't need any money as reserves.
And some people would say, well, that's crazy. They shouldn't lend money out to people that don't have, but these people would still be paying rent. They still have a payment if they don't own their own home. I'm all for getting people into the home.
Yeah, exactly. And they know that they will. Like, if they have rental history that they've paid for 12 months, then we know that they do. If the credit is somewhat good, then we know they can take care of their bills. Like, it's okay that they don't have enough money or their ratios are high or had problems in the past. Like, they're making room for that. And by the way, they're paying mortgage insurance based on it. So the risk level is lessened because of the insurance that they're paying.
And I should mention that we're talking in December. And if you're listening to this podcast in the future, keep in mind that we're talking about rates at the mid-end December right now.
True. FHA is incredible when it comes to duplexes. So I have a client in escrow right now on a $1.5 million duplex. We're going FHA. And he's bringing $100,000 down on a 1.5 million duplex because of the new loan limits, right? Yeah. So, there's so much you can do there.
Yeah. Explain the new loan limits to everyone.
Yeah. So in Los Angeles, we're allowed to go on conventional to what we call high balance loan limits. And a single family residence in LA in 2023, but starting now, I can lock the loans now. The single family residence limit is $1,080,000.
Oh, that's jumped up a lot.
So much. Like, you can get a 1.13 house and put $50,000 down.
Wow.
113 and put $50,000 down.
And you really can be creative. Like I've said on previous podcasts, when my husband and I bought our house, we were struggling musicians and we had roommates for 5 years. So one of them was our producer, CP, who's in the studio with us now. He was one of our roommates for years.
That's awesome.
Thanks for helping pay the bills, CP. But, you can be creative. Having roommates, I think, is a brilliant move to help you buy your house until you're financially secure enough that you can live on your own.
And what she was just saying about the duplex is also, if you can get the vacant duplex, with $100,000 down, buy a $1.1 million house where you're able to leverage the bank's money to make money over the course of owning the house. And these guys are paying half your rent because they got the house in the back.
Right. It's such a good move.
Half your mortgage.
Half your mortgage. Yeah. Right. Half their rent is your mortgage.
And then it's kind of like you're paying your payments more like you're paying for a $600,000 house but you've got a stake in all of this real estate.
It's so true.
Right.
So as we're talking about rates, I always think about refinancing and how a lot of people don't really understand what refinancing is. So we bought our house in 2008. I have now refinanced 3 separate times for different reasons. The last time was with Natalie. It was a great experience, Natalie. I'm so happy. The first refinance I did was, it was so exhausting, so much paperwork. And this one was wonderful. You were so wonderful to work with. So for someone listening that is a little nervous about these high rates and they think, well, what if I buy the house and in 3 years rates are a lot lower? Can you explain what a refinance is to someone that doesn't understand what that means?
Sure, of course. So a refinance is when we change the terms of your loan. We actually change the entire loan altogether. So we pay off the current loan and we give you a new loan entirely. And what that looks like is, of course, there are some fees. You've got underwriting fees, processing fees. You have new escrow fees, title fees, because we have to change how title represents this loan. It's a new loan. You can get a refinance within like 6 months from purchasing. So it's not like you have to keep the current loan for that long. We say 6 months because if it's within 6 months, then the refi is considered a cash out. Sometimes rates aren't as good. But if you wait, again, only about 6 months, then you can totally refinance, get whatever new rate, new program. Let's say you want to refi. Let's say you're doing an ARM now because rates are lower. So you can refinance into a 30-year fixed if you want. Or you can refinance in order to pay off some debt. So let's say you've got a nice amount of equity in the property from, let's say you wait a year or two and now you've got a ton of equity, which most people do in Los Angeles, but you've racked up some debts for some reasons. You've redid bathrooms or something was wrong with the sewer and you racked up 20 to 30,000 in debts for different reasons. You can pay off those debts with the equity of your home and you get what we call a cash out refi and you pull money out from the home.
And that's exactly what my husband and I did because our loan amount was quite low because we bought it, we'd been paying off our mortgage for many years. And so we had a ton of equity. So we pulled some of the equity out to purchase another property. We actually ended up building a property and then using that as an investment to sell it. So we wouldn't have had the cash means to buy land and build a home if it wasn't for that cash out refi. And it was such an amazing opportunity, which again, I'm trying to create a nest egg and trying to create financial security because I have 2 kids. Oh my, like just their sports, just their clothes, just a pair of sneakers is $50, on a good day, on a Black Friday sale day. So, financial security, I want to at some point retire and travel and do wonderful things. And, and so this is an amazing option if you are feeling a little nervous about these rates. If you're worried that, what if I get a property today and then rates drop? Well, you do have the option to refinance. So important to have a great lender on your side. Natalie's information is always in our podcast notes. Justin and I have both personally worked with Natalie. We work with a lot of different lenders that we can recommend, but we love Movement Mortgage. We love working with Natalie. We've both personally used Natalie. And again, we have a lot of options, right? But it's so important to work with a lender that knows what they're talking about and can walk you through different options and let you know if it does make sense to refinance, or they might tell you to wait.
For sure. You know how many people I've told to wait this year?
Right.
Like every single person I talk to who needs cash out or needs money for something, it's like, well, let's hold until next year because we do expect rates to come down probably at the end of Q1 in 2023. I mean, that's what all the financial analysts are telling us anyway. So we're waiting on some people to pull the cash out. A bunch of people are doing HELOCs right now, which are equity lines. For me anyway, I'm never quick to refinance unless there is a true net benefit to the borrower for it.
And I think a great conversation for refinance right now, because it isn't a great time to refinance, but it's a great time to buy a house with zero competition because the rates are so high. And that's exactly what my wife and I did 5 years ago, and then saw the property nearly double in value. And then I went to Natalie and asked her to refinance it, and she helped me do that and actually financed away the PMI. And the conversation to have there is kind of, what is it, you're going to pay new loan fees. So you look at that and you look at the difference between what you're paying today and what you're going to pay at the new rates. So we went from 5 to 2.8, and then figure out, and it was like, oh, in 6 months, we're going to make up all those fees.
Yeah, you'll start
and it's just going to be gravy.
Yeah.
So, or you can count the amount of months. Every deal is going to be slightly different. But so you can get into a house at a lower price right now because you don't have 35 offers on every house. And then, hopefully, can't promise, but next year, most of the experts say it's going to start dropping. It's already started dropping a little bit.
And Natalie, we're hitting the end of the year now. Does it still hold true that you should always talk to your lender before you file your taxes?
Yes. I love that you're bringing this up. I always bring this up towards the end of the year. For any of our self-employed borrowers, it's so important, because we are at the end of 2022 now, that you talk to your lender if you weren't qualified this year based on your 2021s, and we've been waiting. It's such a great time to get on the phone and be like, all right, this was my year to date, basically. This is what I'm thinking for 2023 for how I'm going to file my 22s. And have the real discussion with your lender so that they can, we're not supposed to advise, but so that we can analyze and help you through the numbers on what you want to be qualified for and the kind of income that we would need to see to make that happen.
For example, a lot of actors, musicians, artists, creative types, they'll write a ton of stuff off. And then it shows maybe they made $200,000, but they wrote off $140,000 worth of expenses. Guess what? It doesn't look great for you trying to get a loan. So again, run your taxes by your lender and just have some honest conversations about what your goals are. Natalie, thank you so much for coming on the show. You're always such a delight. You have so much information. You break things down in a way that makes it really easy for people to understand. For anyone listening, Natalie's information will be in the podcast notes. She's an amazing lender. We love Movement Mortgage. And you can reach out to her directly to get your pre-approval.
Thanks, guys, so much. It's always such a pleasure.
Here's a buyer's tip. Be a good neighbor. When you move into a new neighborhood, introduce yourself to your neighbors and be thoughtful and kind. Living beside someone that doesn't like you can bite you in the ass. So be considerate of your neighbors and embrace the culture that you're moving into, because really good neighbors can help you in a pinch. It creates community, and bad neighbors can make your life hell. Justin, let's talk about who should wait to buy and who should jump on this market right now.
The easiest, who should jump on it right now, if you have a lot of cash, put it into real estate right now. It's a hedge against inflation. You have no competition or low competition. You're going to get, compared to last year's prices, the prices that we've seen in the last few years, you're going to get a bargain. The more cash you have, it becomes a real easy choice. We
still have multiple offers. So if you're competing with someone that has a low down payment, it's not as maybe financially secure, cash is always king. As agents, when we're reviewing with clients, we love cash offers. Especially right now where we've seen, everybody's had some deals fall through this year where people were qualified and then all of a sudden rates jumped before they locked. And now, you've seen a lot of cancellations, a lot of reductions, a lot of canceled escrows. So, cash, it just takes all that out of the equation, and people value that. I think as well, another thing to consider, whether to buy now or not, is, are you planning to move in the next few years? Because as our market is very unpredictable, we always say we don't have a glass ball to tell us what's going to happen. We don't know. However, real estate should always be a long-term investment if You don't have backups, reserves. You don't have family that could help you in a pinch, all that sort of thing. You want to make sure that if you buy right now, and let's say prices dip, that you're not in a bad financial situation, that you can still make your payments. And, the market generally tends to correct. So we've had recessions where prices actually have increased. It's a really interesting thing. The market is very unpredictable. So if you absolutely know you're moving jobs in 3 years and you know for sure you're going to have to sell in 3 years, it might not be a good idea to buy.
So that brings to mind an anecdote about a great buddy of ours who is a lender, and he bought right before the last crash. And basically within a month of buying this house at Cypress Park, up and coming neighborhood at the time, he was underwater. He lived there and was very, obviously panicked about it. On paper, he had lost all this money. And he waited, and he waited, and he lived there, and he paid the mortgage, and he lived there, and he waited. And eventually, that property came back to where it was when he bought it, and he sold it right then. And he was like, oh my God, I got out. I was speaking to him a couple months ago, and he's like, God, I wish I didn't sell that property.
Do you want to know something really funny about that? I wrote an offer on that property.
Oh, did you?
I did. I'm not even kidding.
For a client or for yourself?
No, for myself as an investment.
Oh, wow.
And I ended up getting outbid. I was being very emotionally detached from it. I'm like, I'm only getting this if it makes sense. I was very conservative with my offer, even knowing there were other offers. And it went above what I wanted to pay. But now, every property that I didn't buy, I am kicking myself that I didn't buy. There's a couple that are the ones that got away. There's an investment property my husband and I almost bought very close to Cypress Park. And that one would have been such an amazing investment. So the lesson is you very rarely hear a story from someone that says, I wish I hadn't have bought.
And if it's scary because you've lost money on paper, the real thing is, can you afford the payments and can you wait it out? Because it's always going to kind of go up and down. But generally, the trajectory is up. And so our good friend, the lender there, who was so happy to get out and get his money and break even after all those years, now he regrets selling it. He wishes he had held it because he would have doubled his money.
Right. And it's a really good point that you only ever lose money if you pull out, if you sell. If the number on paper means absolutely nothing until you sell. So if you're in a home, prices go down. Let's say, a lot of the stuff we're reading is saying that prices are expected to drop in Los Angeles approximately 8% this year. Again, these are guesses. Nobody knows what's going to happen. However, if it means in those 8 months that you're paying rent and your rent is $3,000 to $4,000 a month, if prices drop 8%, you were still making more money than if you would be renting. Another thing that people forget is your monthly payment includes paying down your loan balance. And so even if prices drop, half of your mortgage or more might be going towards the principal. So what you owe on your loan is going down every month. So when you go to resell in the future, you should be putting some money back into your pocket. And again, real estate is unpredictable. However, over the years, it has been a great wealth builder as long as you don't sell in a declining market.
And that's why you just really want to make sure that you have reserve funds, that you can afford your payment, and that it's, if it's more than you would have been paying in rent, it's doable. It's not putting a huge, huge strain on you to be in this house.
I tend to be very conservative with mortgages. So when you get a rate, you can lock in for 30 years fixed. And if you're at a rate that you feel comfortable with, we do think that mortgage rates might drop. You can refinance. However, if you're super conservative, I'm very conservative. So I locked in on a fixed rate loan. Also, my interest rate was really low. But if you do lock in on a fixed rate, you know you're not going to sell for a very long time. You can refinance if rates drop, but if rates go up, you're not going to be paying something that you can't afford. And that's something to talk about really with your lender. If you don't think you're going to be in a property longer than 5 to 10 years, you might want to do an adjustable rate. If you think you're going to stay there and this is going to be where your family is raised and you're going to live there for a long time, you might want to get a fixed. And then you know that your payment is always going to be safe.
Yeah, and then you can really make sure that you're not going to get caught in a down market and have to sell.
Exactly.
And that you can wait it out.
So if you're trying to decide whether you should wait or you should buy now, there's two people you should be discussing this with. Number one is your mortgage broker. They have a really good sense of what your monthly payment will be. They'll look at your financials and you can discuss what makes sense. And the second person is your realtor. And as a realtor, I have talked to people before about selling versus waiting or buying versus waiting. And if it means that your tax return this year is going to show you have a lot more income and you're possibly able to qualify for a higher loan amount that makes more sense to you, it might make sense to wait. Or it might make sense to take advantage of this market that's shifting a little and get into a house for a much better price than you could have a few months ago, although the rates were lower. So it's really a balancing act, and it's just a good thing to have conversations about and really think through. But the one thing we do know is looking does not hurt. And you can go and look, and you can look for a year before you find the right house. So it's the right house at the right time.
It's been years and years that some people I know have been waiting for the market to crash again so they can take advantage of the prices. And the reality is that when we finally did see, after years and years of just going up, a modest adjustment down in recent months, it's still more expensive.
The rates are crazy.
Yeah, yeah.
So it's a juggling act. But if those people waited those 4 years and have been paying rent for 4 years, they are not in a better place. If you're paying $60,000 to $80,000 a year in rent, that is lost money, and you could be using that $60,000 to $80,000 to build your wealth.
Absolutely. And here's something to think about. So when you're looking at your rent payment, and even if it's less than the mortgage payment would be, and you look at the mortgage plus tax, don't forget about the tax and insurance, but ask some questions. Find out how much equity you're putting in per month. Cut that off the top. Find out what your interest rate deduction is at the end of the year for taxes. Cut that off the top. Then divide that by 12 and go, okay, am I still paying more?
Yeah, exactly. That's a really, really good point. All right, we're right back with a buyer's tip. Here's a buyer's tip. Clean your house. If you can't, or you won't, hire somebody. Deferred cleaning can damage a property and really, truly decrease value. Okay, Justin, let's talk about first-time home buyer nerves. We work with lots of buyers. Let's talk a little about the emotional roller coaster that happens when you're a first-time home buyer. And I love this because you just went through it. Now, you're not a first-time home buyer, but you did just go through the process yourself. So what do you think when people have nerves? It's a scary time. It's a huge investment. And how do you know you're not making a mistake, or this is the right time, or the emotional roller coaster of buying?
In LA, where generally it's been a seller's market for years until very recently, it's so hard to get a house. So everybody, please give me the house. Please give me the house. What can I do to give you the house? I'll give a month lease back. I'll pay your closing costs. I'll do this, right? Everything to get the house. And then once they get the house, it's like, oh, well, there's a scratch on the floor, and all of a sudden that you put on a different hat, everything changes. All of a sudden the psychology changes. Now you're looking for everything that's wrong with the house, right?
That's like once the offer is accepted.
Once the offer is accepted,
yes,
exactly. Yeah.
There's a huge emotional shift where it's almost like oh, this person thinks I'm cute. I don't know if I want this person. And then that person goes and gets a partner, and then you're like, oh, that maybe I should. It's like buyer's remorse, kind of. You don't know. So I remember when we put an offer in on our house, it was a scary time because it was 2008. The market had just completely collapsed. And I was like, I'm going to buy a house. We're going to go buy a house. And I remember the feeling. We put an offer in. I didn't think it would happen because we put in a pretty low offer and it was a bank-owned home. It was a complicated one. Finally, they accepted the offer. And I remember this feeling in the pit of my stomach that was like, uh-oh, did I just make the hugest mistake of my life? And I asked our realtor at the time if I could go and see the house again. And I walked in, and all of a sudden I noticed stained carpet, popcorn ceilings, and how ugly. It's an 80s house, an 80 square. And I was like, what the hell did I do? This is an ugly, ugly, ugly house. And so my realtor had to talk me off the cliff a little, the ledge. He's like, this, I think, is a really good investment, Sarah. This is you're getting it at an amazing price. It's a huge lot. It's a big house. The kitchen's ugly and dated. And yes, there's popcorn ceiling. And yes, there's stained carpet. But I can't believe how much more I noticed the ugly things after the offer was accepted.
Right. So there's that huge psychological shift. And then there's what comes with that too is, like you said, you were comparing it to like dating, which is like, then you start looking at the field and going, oh, what else? So you're in escrow and you're going, oh my God, this has got an extra bedroom and it's listed for $10,000 less. And, so you field those questions from clients too. And you're like, well, look, the list price doesn't mean the sale price.
Right. Right.
And, who knows? A lot of times people intentionally price low here. You don't really know that you could have gotten more or it's worth bailing and trying to pursue that cute boy down the street, right?
Totally. Well, and I think that is really good. It's really good advice. So if you're a buyer, you finally get your offer accepted. It's at a good price. What I want you to focus on in your new home is not the defects, but the potential. Over the years, my husband and I have renovated the kitchen. We've redone all the bathrooms. We scraped the popcorn ceiling ourselves. We removed all of the carpet and put in hardwood floors. We've repainted it. We put in a huge deck. And this is over a number of years. I mean, over a decade, right? We bought in 2008. It's 2023, if you can believe it. And so we've done nothing but add value. And that's why I always say focus on the potential. Buy a house that needs work. Buy the ugly house. Justin and I talk about this all the time. Buy the ugly house so that you can do nothing but make it better. And then eventually when your situation changes, maybe you need more space, maybe you're moving locations, you will have equity because you've made that house better no matter what market you're in. We've had clients over the last couple of years, especially in that crazy market, that got incredible buys. Incredible. I mean, hundreds of thousands of dollars of equity because they bought the ugly house and they're making it better, and they bought the house that was hard to see, and they bought the house that was complicated, and those are great buys. And so it is an emotional journey, and we're happy to ride that wave with you and talk you through it and hold your hand. And people cry on the phone and they cry in person. It's a huge emotional transaction, and it's a really interesting transaction because we get so close with our clients through this journey, and it's a really neat, amazing experience to be able to walk somebody through that. So if you're a ball of emotions, it's totally cool. It's totally fine. Every single buyer feels that way. The whole, oh my gosh, am I making a mistake? And we will tell you if we think you are making a mistake. I have talked buyers out of buying homes before. If I thought that the potential wasn't there, if I thought that, most of the time it's that I think you're overpaying for something at the peak of its potential. But we're here to be on that journey with you, right, Justin?
Yeah, I'm not a licensed therapist, but I sometimes play one on TV.
That's it. That's a wrap for another episode of the LA Real Estate Podcast. I'm your host, Sarah Skelton. With me, of course, is Justin.webb from the Skelton Group. We're happy to help you on your real estate journey, whatever that may entail. And we also want to thank our guest, Natalie Salins from Movement Mortgage. Natalie's contact info is in the podcast notes. As always, she's a good friend of the show, a good personal friend to the both of us, and always happy to help you on your journey. I guess that's it for us. Happy New Year, and we'll see you on the next one.